Evening, everyone, or I should say good afternoon. I'm sorry. I'd like to introduce myself. My name is Amy Woods, and I have my colleague Jeff Kleinschmidt on the line with us today to present on SBA, some general commercial lending, and just really here to answer questions that you may have around those topics and be a resource for everyone. Um, Jeff, I will introduce Jeff. Jeff is a Senior Vice President, SBA Group Sales Manager for Old National Bank. In his role, he's helped hundreds of businesses secure more than 400 million in SBA financing across commercial real estate, acquisitions, expansions, and startup capital. So welcome, Jeff. Thank you.
Thank you so much. Appreciate
Mhm.
being here.
As for myself, I have 25 years experience in helping business owners navigate banking relationships, cash management, and customized financial solutions that support growth. I am a generalist commercial banker, so if I have a deal that we would like the SBA to participate in, then I hand that deal over to Jeff, and he is the quarterback on that. If it's conventional financing, that's a role that I would take on myself. So today is an open floor conversation. Please make sure in the chat, or if you want to unmute yourself, I'm not sure if that's an option, Pajan, but we're here to answer questions. We're here to be a resource for you. So please feel free to throw those in the Q&A, and we will answer those at the end of the presentation. If you have something that you'd like answered during any of our slides, please feel free to throw that in, and then Pajan will take that for us. So maybe we could start with the first slide. I'm going to hand it over to Jeff to present on this first slide. So Danny, if you could throw that up on the screen, we'd appreciate it.
Great. Oh, did you want to
Oh,
go
I'm
through that?
sorry. I forgot to do that part. Sorry, everyone. This is kind of just a general overview. Jeff and I both are from Old National Bank. We're primarily Midwest based. So you can see the states on there where we do lending all the way up from North Dakota down through Tennessee, North Carolina. So that's where our footprint is, and that is where we lend. However, we have resources all around the country. So if you have questions, we can put you in touch with a lender in a state that may not be in our footprint. But our footprint is mostly these states. But again, we're here for questions and things like that. So if you want to link in with us and reach out to us, we have no problem with doing that, even if you're not in one of those states. And we can hopefully help you find someone who is within a state that you're located if it's not one of these states. I personally sit in Illinois, and Jeff, I'll hand it over to him and he can talk about where he sits, and then we can go on to the next slide. Sorry about that.
Yeah, great. Please feel free to go to the next slide. I'm based in Ann Arbor, Michigan, but just like Amy, if we look at that map, we can do deals in any of those 15 states and have done that over the years. But based here in Ann Arbor, Michigan, and happy to help out with any questions or comments you have along the way. The most frequent question we get is what's the difference between a conventional loan, a bank loan versus an SBA loan? So those first two bullets I'm going to kind of combine into one because it kind of blends into each other. But basically, there's three or four primary differences between a conventional bank loan, SBA loan. Number one is the term or the amortization. Typically, a bank loan, and we kind of categorize it into three categories, whether it's a working capital loan, an equipment loan for fixed assets, or a real estate loan. Those are the three general categories. But with SBA, we can lend for longer terms than the bank can. So equipment generally, the bank can lend 5 years maybe. SBA can lend 10 years. A working capital loan, the bank usually tries to keep those in a line of credit that can be repaid within a certain period of time, within 1 year. We can actually do those up to 10 years on the SBA side. And then with real estate, the bank typically likes to keep those up to 20 years. and the SBA can go up to 25 years. So there's some primary differences there. But the other two big differences are loan to value, or how much we'll lend against certain assets versus the bank. So with SBA lending, we can go up to 90% of equipment purchases, up to 90% of real estate purchases, whereas the bank's going to try to keep those maybe in that 75% range. So those are some big differences there. But the other big difference is with SBA, we can fund collateral shortfalls if those exist. Banks typically want collateral coverage. And if it doesn't fall into the collateral coverage, it may not fit the box. So those are the primary big differences. And if you have questions about that anytime, feel free to raise your hand or jump in and ask questions about that. So those are the big differences that we typically describe in the difference in SBA and conventional lending. Some big new rules that happened here just March 1st of 2026. SBA is now requiring that 100% ownership of any loan or any borrower who's coming to the SBA for a loan has to have 100% ownership by U.S. citizens or U.S. nationals, foreign nationals. So no longer can we do deals where there's a green card or other non-citizens to make the eligibility work. So the SBA has what they call their guidelines are called the SOP, and those change frequently. So as of March 1st, those just mandated the change so that 100% of our borrowing company needs to be comprised of U.S. citizens or U.S. foreign nationals and no longer green card holders. So that's a big change, and that's been affecting a lot of our deals. Not sure if it'll impact any of the members on this call, but it's one of the big things that we're talking about here with SBA lending. And then what are some of the high-level programs? There's two main programs for SBA lending. There's the SBA 504 loan program and the SBA 7A program. If you look nationally at how SBA loans originated, it's about $35 to $40 billion a year of SBA lending. Most of that is in the SBA 7A program, probably 80 to 85% of that's the SBA 7A program. The SBA 504 program, as many of you may know, is just primarily for fixed asset loans only, mostly commercial real estate. With the SBA 7A loan program, the reason why there's 80 to 85% of those is because it's much more flexible. Any general eligible business purpose we can do on the SBA 7A side, and combine those uses too. Working capital, startup costs, equipment purchases, expansion of your business, real estate purchases, all can be done on the SBA 7A side, whereas the 504 is a little bit more restrictive, but it has its use for fixed asset financing. So any questions on that so far? If not, maybe we can jump to the next slide. So how to prepare to meet with your banker, and prepare is the operative word there. So if you think about it, get prepared means if you have a business, an operating business already, get your financials in order. 3 years of federal tax returns for the past few years, get your current balance sheet and income statement available, your accounts receivable aging, your accounts payable aging, and then anyone who owns 20% or more of the company should put together a personal financial statement, because in most cases, whether it's SBA or conventional lending, you're going to be asked to be a personal guarantor. So we'll want to see what your current personal financial statement looks like, as well as your past 3 years personal tax returns. And then give some thought to what is it that you're asking us for, and how would you pay it back? So give it so that you can tell us and communicate that with us, and kind of convince us as to why this is a good deal for you. Why do you want that loan? What makes sense to get this loan, and how can we help you do that? Maybe next slide. And I know Amy and I are both going to talk about this, but when you're looking for a commercial loan, you got to have a team. Not only just you and the banker, it should be your CPA or accountant. It should be your attorney. It might be your spouse or significant other. It might be key principals, might be key employees. If you're buying a business, buying real estate should be your broker or advisor as well. Amy, any other thoughts on the team?
I would say your banker should be the quarterback within the bank, but there also are other people within the bank. So let's say you come to me and you're like, this is what's going on. We want to make sure we're meeting with Jeff. Let's say we're throwing an SBA option in there, so we bring Jeff into the picture. Let's say I know one of the previous questions that were presented before we decided to put this together today that were pre sent in was, what if I'm transitioning out of a business, or what if I'm transitioning into a business? It's all about making sure that we're looking for tax consequences and what are the best ways to, pay your fair share of taxes, but also not overpay on taxes. So that's where we might bring someone who is, a financial planner into there. There's just a lot of people. And by broker on there, we also mean a business broker. Let's say if you're looking into, hey, I'd really like to become my own business owner, but I don't know which route to take. That might be talking to someone who works with different franchises. Maybe it's a franchise you're looking. Maybe it's someone who you say, I already have a manufacturing business, but I'd like to complement that. And let's see if there's any other manufacturing businesses in my area or in the vicinity that would be looking to sell right now that might be something complementary to what I'm doing. So just business brokers, and you can get referrals to brokers with through your banker or different people like that. So I also want to kind of go back to the preparing to meet with your banker slide. I think Jeff and I think one of the best parts of our job is getting to hear why you want to do what you do, what you're going to do. So it's really exciting to think about. I've worked for this company for 20 years. The owner is selling, and so I'd really like to phase in some ownership into this, or the owner is looking to retire. So maybe it's planning for the future, and you've been a loyal employee for all of that time, and it's maybe we can enable you to purchase this business, or vice versa. Maybe you own the business currently and you're looking to phase out. Again, that was one of the questions. How can you do that? What does that look like? Because there are so many wonderful ways that the SBA can help you with that. So, I think hearing your story is the key part of it, because you are your business at the end of the day. And that's exciting to us. It's exciting for us to be able to listen to what you have to say and what your goals are in life and helping you achieve those goals. And giving you advice. So not only if it's a new business, but it's an existing business, and you come in and you say, think about what issues you're facing internally and be prepared to discuss them. Maybe you come into the bank and you say, I've been exporting to, whatever country it is. Maybe I've been exporting to China, although most of that is the opposite way. But let's just say for conversation's sake, I've been exporting. It's taking me, 60 days to get payment back. I'm kind of in this cash crunch. What are some ideas? And here's my accounts receivable. How can we look at that and make it to where, I can get a line of credit, or I can get a greater line of credit, or what different tools can I use to, shrink that lag time between when I'm paying for my inventory or, my supplies to produce my inventory and I'm getting paid. How can we shorten that time frame between those two, and how can we cover that? So just my other piece of advice for meeting with a banker is also asking around. Get a I think the best compliment I can get, as well as Jeff, is repeat customers or referrals to other customers, because that means we've done a good job. That means that our customers trust us and would recommend us to others. So if you are, in a position where you're looking, I'm not thrilled with my bank right now. What should I do? Maybe ask around other different business owners within your group here. This is what your group here is for, is networking and things like that. Maybe it's asking for different business owners. Who do you bank with and what do you like about them? Maybe it's just, reaching out and interviewing different banks and things. So then are we getting any questions? Nobody's asking anything?
Shy group today. Well, we could go right to the prepared questions too, if there's no
Sure.
questions
Jeff, you want to
pending.
go into that?
Yeah, absolutely. We received some prepared questions in advance, which we appreciate. Well, if the folks who asked are on and I didn't, respond to these correctly, just let us know and jump in and interrupt us anytime along the way. First question is, when is it appropriate to apply for an SBA loan? And I think leaving this screen up is this slide is a good one, how to prepare to meet with your banker. The first thing is, it's never too early. If you just want to call us and say, hey, I'm thinking about this, whether you have a relationship or not with a bank, I'm thinking about this. What do you think? What do I need to do? And then we're basically going to say, well, how is it that that's good for you and your company? What is it that will impact those things? So what I usually say is we've got a pre-application package, and a lot of the things are on here: tax returns, current financial statements, things like that. So as you're having a need for financing, think about the things that you're going to want to present to us, because your financial statements are telling the story to us. You're going to describe to us how you're going to use the money, but we also have to have a picture of how your cash flow can translate into repayment of that. So it's never too early. Start a conversation, compile the necessary information. We have, just like a lot of SBA lenders, we have a pre-application package that we're always happy to send to you.
Okay, so we have questions from Thomas in the chat. Does having an EIDL loan impact new SBA loan application? Should we
Great.
pay off the EIDL first? And
it's a great question. We get that one a lot too. So EIDL loans, as you know, were done during COVID, and they're long-term, low interest rate loans. I think they were great. I don't think I would recommend anybody pay it off unless you really want to, because the cash flow on those is so good. It's unless you're selling the business, you probably want to keep that out there. But EIDL loans do not count against your SBA cap. And then what we found is, if there is an EIDL loan outstanding and you're asking for a new SBA loan, that the SBA will generally subordinate their collateral position to a new SBA loan. So it's kind of a benefit to keep it out there. In most cases, it makes sense to keep it out there unless you're selling the business. And in some cases, you can get that loan assumed, but it's a process to do it. So hopefully I answered that question sufficiently. Any other questions out there before I move
Hey,
on?
Jeff, Thomas also asked, what do you recommend companies look for in an SBA lender?
Oh, that's a great question. There's two things I always ask or recommend. So the SBA has designated lenders to be preferred lenders and non-preferred lenders. So a preferred lender, like Old National, means we have delegated authority. We've earned a status with SBA because of our volume of loans and because of our credit quality with the SBA. So they've provided us a standard that's called preferred, which means we get delegated underwriting. So we have a team of 26 people. All we do is SBA loans for Old National Bank. A lot of lenders are like that. So ask if they're a preferred lender, because that means we don't have to go and get the SBA's permission. We have to just abide by the SBA's SOP. And if we do our job and do it by the SOP, by the book, we don't have to get SBA's permission. We can approve that. We can originate it, approve it, and close that loan and save time for the borrower. So that's one thing. Make sure you're with a preferred lender. The second thing is, are they a fixed rate or a variable rate SBA lender? A lot of lenders out there these days are variable rate lenders, 2.5%, 3% over prime. Today, prime rate is 6.75%. So you might be getting charged 9% plus or minus on a variable rate basis. Or lenders like Old National, and there are others out there too, are fixed rate lenders and will fix the rate for 5 or 10 or 25 years, depending on the use of the funds and the amortization of that loan. So those are the two things I recommend: preferred lender, and are you a fixed or variable rate lender?
Hey, Jeff, to dovetail on that, one of the pre-submitted questions was, what are the top reasons an SBA loan application would get delayed or declined?
Lack of preparation, I think, and just confusing information. So a lot of loans that don't make it through are because there was just deal fatigue. The information wasn't there. So that's why we have a pre-application package and checklist. And we like to get everything on our checklist before we submit underwriting, because it's just like anything else. You don't get a second chance to make a first impression. You always want to be selling, right? Same thing with us. When we submit a deal to our underwriters, we want to make sure everything's wrapped up in a nice, tidy package. When it's incomplete or insufficient, that's when people just put it to the side and lose interest in a deal, and it just loses steam and gets deal fatigue. So that's probably the number one reason why applications get delayed, declined, or just fizzle out.
So if someone is looking to start a business or a newer business, or they're purchasing a business, what about financials, and like, would they put together a business plan? And I'm talking as if I'm the customer right here. So
I saw one of
putting together business plan, or do they need the seller's financials, or what about that?
So let me start with startups. So SBA is one of the best sources for startup businesses. The conventional bank loans, whether it's Old National or anybody else, they want a track record of cash flow, right? So when that doesn't exist, that tends to, push it to the side from a conventional bank. But SBA, the job of SBA is to either create or retain jobs. That's SBA's main purpose. How do they do that? They guarantee loans for lenders like us to be able to provide startup financing. So if you don't have a history, it's, do you have experience in that industry? What's your business plan, and what are your projections? And make sure those projections are relevant and substantial, so that it's just not numbers, but the numbers speak to us. There's an explanation behind the revenue, explanation behind the expenses. So it shows that you're prepared and you can speak the language of that specific industry, whatever that may be.
So another question that it popped up on the chat, Jeff.
Oh, okay.
Do SBA loans typically require profit in the past 3 years?
So for a startup, no, because we do startups all the time. But if you're an existing business coming in to ask for a loan, whether it's for an expansion or equipment or whatever, yes, it does. So we will always ask for 3 years of tax returns and a current financial statement. The SBA's mantra is to be eligible at least the last year, and the current year need to have been profitable and cash flow supportive for that request. A lot of these.
So Thomas, I want to address that a little bit too.
Yeah.
When we talk about profitable, that bottom line on your tax return, that net income might be negative, but you're still a profitable company. So that's where a banker should be able to, or an accountant should be able to go over those tax returns with you. Because let's say I own a business, I have a lot of equipment, and I purchased a lot of equipment. On my tax return, it shows my sales, and then it's my cost of goods sold and different things like that. And then at the bottom, let's say I'm negative, $15,000. Well, if I purchased $100,000 worth of equipment and I've depreciated a lot of that, that's a tax thing. That's not a actual cash thing. So there's ways that a customer can look really negative on their very, very bottom line, but we add back in certain things. So I would recommend going in with your banker, with a Jeff, with myself, where we can kind of walk you through that to where you can understand that a little bit better. So just because the bottom line is negative doesn't always mean it's negative. So
Right. And I think the other thing that we're seeing to answer the question about does it have to be profitable for the last 3 years is that we're now 5 or 6 years past the COVID uh, climate, right? It was a strange time in 21, 22, 23, and we saw either some industries did really, really well, some did really, really poorly. So that COVID bump or that COVID decline is kind of over, but we're still seeing some of those things when you look back 3 years. So again, just repeating that, even though we're asking for 3 years, it doesn't mean that 3 years has to be profitable, but the most recent tax return and the most recent year-to-date financial statement do need to support that debt service that you're requesting.
Jeff, there's another one on there. What are some recommendations for green card holders looking for financing after the SBA rule change?
That's a great question. I feel terrible about that because
Terrible.
that was sprung on us in February and effective March 1st. I actually had deals in process that it killed their deals, and I feel horribly about it. I don't have any good things unless there's angel financing or non-conventional, non-bank loans. But again, that probably costs more. And I don't even really know what that would be.
Just because you're a green card holder and you're not eligible for SBA doesn't necessarily mean you're not eligible for conventional bank financing.
That's a good point.
So you definitely need to, and it could be, if it's a startup, well, maybe you do a home equity loan on your house and tapping into some of that equity to get some capital. Maybe it means, there's a lot of different ways. Maybe it means like, maybe you've got some marketable securities, getting a loan against those marketable securities or something like that. But I definitely think it's still worth a visit to your bank to talk to them about that. Just because SBA is off the table, there's still other creative ways we can do things. So.
All right. Any other questions along that line that I'm missing?
Is SBA rule change restricting to U.S. nationals a permanent change?
Well, it's permanent until it changes. How's that? What we've seen over the last 3 years with SBA's SOP changes is the pendulum shifts. Pendulum in terms of economic climate, pendulum in terms of political climate. So again, it's permanent until it changes. And I don't mean to avoid the answer. It's not my intention to be flippant. It's just that could change if we have a different administration. It's just hard to tell. There's just no way to know, but for now it is permanent.
I'll take one of, before I answer that USPAACC team question, I'm going to take one of these that were pre-submitted. How often should a business proactively meet with their banker, even if they don't need a loan? I would say every year you get your tax return, you go to talk to your banker, or before you even file your tax return. You go and talk to your banker and say, here's my draft of my tax return. Let's talk through these numbers and talk through what this looks like so that you know when you're submitting this to the IRS that it's a truthful statement. And I've heard so many times, often where I'm located, there is a lot of Hispanic population, and sometimes with different cultural differences, they are afraid of, they do a lot with cash, and they're afraid maybe of putting things on paper, and that's nothing to be afraid of. And that's something that we're not here to judge. We are here to be advisors for you. We have to go what's on the tax return, but I've had some customers come to me with tax returns that they didn't understand what their accountant was doing. And their accountant's job was to make sure they paid as little taxes as possible. So the accountant's job and the banker's job sometimes, conflict a little bit because, as Jeff was saying, we have to see a profit, and we want to make sure that what your accountant puts on your tax return is the actual picture of your business. And maybe sometimes that is correct, that there is not that income there, but maybe sometimes they're looking to try and save taxes, and so that's kind of going against maybe what your long-term goals would be helped with. So I would say annually with your tax return. If you're looking at ever borrowing, I would say you should annually meet with them with your tax return. And if you're an existing business, I would say, you tell them we're here for you. So I have customers that sometimes want to meet quarterly with me, but I also have some customers that are like, I don't want to talk to you until I need something from you. So I feel like you are our customers, just like you have your customers. So I would say at the very minimum annually, but I would say if you want to meet more often than that, especially nowadays with so many resources we have with online meetings, it's nothing for your banker to sit 30 minutes with you on a Teams call and go over some financials and just different issues that you're facing. So, Jeff, here's another question for you. I heard that personal finances affect business loans. Is this the same for SBA loans? In that vein, what difference from a regular business loan versus an SBA loan?
I'm not sure I understand the second part of that question, but the first part of that question is absolutely your personal finances do affect your SBA loan. So from an SBA perspective, we're going to do things. We're going to do a cash flow on the business cash flow. We're going to do a personal cash flow, and then we're going to combine those two in what we call a global cash flow, combining the individuals with the business to make sure that there's sufficient cash flow to support not only the business debt service, but the personal debt service. And the other thing is credit, right? So if there's bad credit or foreclosures or any defaults out there, that will definitely impact your ability to get an SBA loan, as well as a conventional loan too, but certainly an SBA loan. So be as clean as you can, get caught up if things are, deferred or delayed, make sure you're catching up on those things because they will impact your ability to get a loan.
I'm going to go into that second part in that vein, what differs from a regular business loan versus an SBA loan. So my customers typically are customers that have been in business at least 2 years. So if I have someone coming in and they have been in business a little bit less than 2 years or it's a startup, what that presents to the bank is a little bit of extra risk, actually a lot of extra risk because it's a newer company. So in order to combat that risk, what we'll do is we'll go to, we might suggest an SBA loan. So Jeff, why don't you talk about how SBA gives the bank comfort in lending to a little bit riskier of a scenario?
Yeah. So the reason why someone like Amy would shift it over is because it doesn't fit the credit box or the credit profile of what the bank is trying to accomplish on a conventional basis. Because remember, banks are not investors, they're lenders. They want to get paid back out of cash flow. And if not out of cash flow, they want to get repaid by collateral, by liquidation, but that's always the last resort. SBA came into play, and it's now been, the 7(a) program has been around decades, but it really became popular during the 2008, 2009 recession, because that's when banks were starting to shut down and kind of pull back on lending. So SBA became more popular. The reason that is because for every dollar, the SBA will guarantee us 75% of every dollar that they lend. So if you think about a $1 million loan, once we close that loan, we'll get a guarantee for $750,000. That doesn't mean the SBA is going to write us a check. It means if you default on that $1 million loan, we then have to go by the book, the SOP, liquidate that loan, collect that loan, and then whatever's left over after we're done liquidating, we kind of present that to the SBA, and they give us a check for 75% of that deficiency. So again, kind of playing through that example, $1 million loan, and let's say, it goes into default, we have to liquidate, we have to collect, and at the end of the day, there's $100,000 deficiency. We have to go to the SBA and go, okay, we did everything we could to collect on that loan. The deficiency is $100,000. They'd give us a check for $75,000 and we'd be out 25. So we still have the risk for the top 25% of that loan, but it's comforting to know the SBA is behind us for 75% of that for sure.
Yeah. And you've heard Jeff talk a lot about cash flow, and myself included. The bank really, at the end of the day, just wants to get paid back. That's it. Like, I know you could have a house that's free and clear or something like that, and you go, well, I just want to take, let's say your house is worth 250,000 and you want a loan for 100,000, but your tax return shows you only make, say, $25,000 a year, and you have credit cards balances of $40,000 or something like that. I don't care. The bank doesn't care that you own that house free and clear, because you're not making enough income that if we gave you those funds that you would pay us back. So always the number one focus of a bank is just getting paid back, because we don't want your house. We don't want to ever liquidate. Like Jeff said, that's always our last resort. That is not what we want to do, because it's costly for us to have to foreclose on a house, list a house, get the sale done, all of that. We just want to get paid back. So I think that's something to really think about. What about how important, this is another question, Jeff, how important is a Dun and Bradstreet number for a loan? Is it recommended?
I'm not really sure exactly what that means, Dun and Bradstreet, but I mean.
So if they're on the DMB, I would not focus too much on that. Those are more useful if we're like scoring loans and it's a very small loan, and it's almost like a credit report for a business, but we don't. Businesses, like we have, you all know we have our credit score on our personal side, but there is no such thing as that on a business. So where we're looking at that is, in your financial statements. We're not going out there. There is nothing that we can pull. You can pull a Dun and Bradstreet, but I don't know how reliable that is. There's nothing we can really pull
in the SBA world. Is really not reliable or useful to us.
Yeah. So I would not spend your money on that. Another one, that's what I was just looking at. When you think of your business to be set up for an exit strategy, parent company versus umbrella company, I'm thinking of my 3 I'm planning. I would always suggest, if you're looking to exit and and you're thinking of exiting and selling the business to someone within the company, I would definitely suggest, speaking with someone like Jeff. And Jeff, why don't you talk about how that would look?
Yeah, I think it's still along the same lines. You think about, okay, I'm considering the exit, considering the sale, whether it's internal to key employees or externally and being brokered on the market, like you would with real estate. I think it's the same kind of concept. 3 years of tax returns. Are my most recent 3 years indicative of what I want that cash flow to look like to maximize the sale proceeds of the business? So it's never too early. You should be talking to your CPA and maybe talking to a broker or advisor about how to position for those things, because we hear too many stories about how someone just wakes up and says, I'm going to sell my business tomorrow morning. But then when you look back a year, 2 years, 3 years, the numbers are either inconsistent or unprofitable. It may not be the right time. So if you do have time to prepare your financials to have the best, impression, that would be the thing I would advise, is make sure you're positioning your financials to show in the best light to achieve the highest price for your business when you're going to sell.
In addition to that, I would also throw in there meeting with your accountant, meeting with your personal financial advisor, all about those ways of how can I, minimize my tax burden with a large windfall, and could be like staggering payments, or for your company, could be in a multitude of ways.
And along the same lines, we've referenced it earlier, Amy, about sometimes there's conflicts between what the CPA is doing with the tax return versus what the banker would like to see. they may have to have an honest conversation about, hey, this isn't about mitigating taxes, it's about positioning for sale. And
Yeah,
sometimes that tax preparation or those financial strategies are different than minimizing your tax burden.
yeah. Um, I've been looking at, this is another question that just popped up, Jeff. I've been looking at several loans. However, they recommend a blanket lien. Is this common practice or predatory? That's 100% common practice.
Absolutely. It's required, actually. SBA
Yep.
requires a first lien on all assets when we do a loan.
Yep. So what that blanket lien means is that if you own a business, we're talking about a business, not necessarily talking about you own the real estate of the business, but you just own a business. You could own the real estate, but we're talking about, like, let's say you go in and you're getting a line of credit or you're getting an SBA loan from Jeff to purchase a business or whatnot. There's something called the UCC, the Uniform Commercial Code. And what a bank will do is, let's say you have a line of credit for $100,000 or whatever. Instead of saying, okay, we have, if this loan goes bad, we can go in and take that desk or this, and all this. It just says we kind of own we have a lien on everything that your company owns. Now, that does not include titled vehicles or real estate, but it would be just, accounts receivable. It would be your equipment that's not titled or doesn't have VIN numbers or serial numbers on it. Just kind of a blanket lien. And that's the only security we would have. So it's definitely common practice.
Definitely.
You can look also on your Secretary of State's website, and you can see if your company has a UCC filing. So I know in Illinois, you can go on there. It's very easy. You can search up your company name and you can see, and it will give you a copy of those. Because if you maybe say you've left one bank A to go to bank B, you want to make sure if you've closed out your line of credit that they release that UCC lien on there. Because when you do go to bank B and you're looking for a line of credit, they're going to want to be what's called like first position. So they would want to be the main UCC lien. They don't want this other bank to have a lien in front of them. Same as if you do a mortgage or something like that. A mortgage company would release their mortgage, so the next mortgage company could come in and place their mortgage. So can you guys think of any other questions? No question is too basic for us either. We speak in our terms, but we don't know what you don't know. So we're trying to, cover as much as we can without knowing exactly where this was going. Oh, what is a UCC lien? That is basically the Uniform Commercial Code. It's law, and it basically says that if your company dissolved, we would go in to the judge and say, hey, we have an interest in this company, so we need to make sure we get paid first.
And similar to what you do with the vehicles, you get a lien on the title, so to speak. The UCC lien would put a lien on business assets that aren't titled. So that's kind of the distinction.
Hi, Jeff. This is Susan. At the beginning of your presentation, when you come to I think the third bullet point, when you made the distinction between a conventional loan and an SBA loan, you made a couple of important points that I was distracted. Could you repeat that? You did that before you moved to the next section.
Oh, sure. So one is the time in business where, we can do startups. The bank wants to see 3 years of history so that you're a solid, operating business. Another one is the term and the amortization. So SBA loans can be done for longer terms than bank loans. Collateral, the bank wants to stay within a collateral formula. The SBA can exceed collateral formulas and do what we call collateral shortfalls, collateral airballs. And then the loan to value is probably the other one too. So if If on real estate or equipment, we can do up to 90%. The bank may be able to go up to 75%. For real estate loans, we can do 25 years. The bank might do 20. Equipment loans, SBA can do 10. The bank might do 5. So those are some of the big differences. And hopefully that answered your question. But if not, please let me know and I can try to keep going.
Sure. There's been rumors that if you borrow from the SBA, you pay points and a high interest rate. Is that correct?
Well, again, let's do both of those. The high interest rate, again, is, are you dealing with a variable rate lender or a fixed rate lender? So variable rate lenders are getting 2.5% to 3% over prime rate. Prime rate on a variable basis, the prime rate today is 6.75. So it could be anywhere from 9.25 to 9.75. We are a fixed rate lender. We're doing our fixed rate loans right now in the 7.5 to 7.75 range, depending on term, amortization, and all those other factors. So depends on which lender you're dealing with, and and whether they're fixed or variable. The second half of that was fees. Yes, so SBA does collect fees. Those fees go directly to the SBA, not to the banks, and those fees go into the SBA's program fund. Believe it or not, SBA is probably the only, if not one of the very few agencies of the United States government that is self-funding, meaning the fees that we collect and pay to the SBA at a loan closing go to the SBA for loan loss reserves and for program administration for the staff and for all the programs that they administer there. So yes, there are fees. So what I generally tell people is that if you borrow $1 million and there's a 75% guarantee, it's roughly a 3% guarantee, 3% of the guaranteed loan amount. So if you think about the $1 million loan, $750,000 guarantee times 3%, maybe around $22,000, something like that. And we can finance that, so it doesn't require that you pay cash, but we can roll that into the financing over the 10 years or the 25 years.
Okay, thank you.
Hey, Jeff, can you talk a little bit about the manufacturing, the new manufacturing rules to spur manufacturing being brought over to the U.S.? Okay.
Through the international trade program of the SBA 7A program, because there's little tranches within there, there are certain NAICS codes, NAICS, which if you go to your tax return, it's your industrial classification. So if you each have a business and you have a tax return, up in the upper left corner, there's what we call a NAICS code, the 6-digit code that says what industry and what you do for your business. If any of your NAICS codes start with 31, 32, or 33, you can now go in and ask through the International Trade Program, ask for a 90% guarantee as opposed to a 75% guarantee. So it helps us out, which then eventually helps you out by getting, we have more comfort to give that loan because now we have a 90% guarantee versus a 75% guarantee. So that's just gone into effect May 1st, coming into effect May 1st.
I think for the audience, it would be great to repeat once again, what's the advantage of going into a conventional loan versus an SBA loan with a view on the fees that they have to pay?
Sure.
Did they come up short or ahead?
Well, I guess it's a matter of cash flow and what you're trying to accomplish. So if you have the ability to cash flow a loan and structure a loan with a conventional loan, by all means, I think that's the best way to always do it. It's going to be cheaper and probably better in the long run for your company if you can qualify for a conventional loan in general. But if there's something that then causes Amy as a conventional lender to say, doesn't fit cash flow, doesn't fit collateral, doesn't fit the time, maybe the financials are inconsistent, maybe there's something that just causes them to pause a little bit, they would then refer it to an SBA lender like myself and say, can you do this? And then we could step in and use a longer amortization, use a higher leverage, whatever the case may be, to get that deal done for you. So it's meant to be an alternative to commercial lending, but yes, there are fees associated with that.
So another thing I wanted to bring up, so even sometimes, like Jeff briefly touched on the 504 program, which that would be a whole nother conference call maybe that we could have. But with the 504 program, I have some customers who can cash flow the deal and it could go conventional and we would be just fine with that. But they just happen to qualify for the 504. And a lot of times the 504 rates are actually lower than the bank rate. So in that instance, it would make sense for them to go with the SBA. That's where I would hope that you have a banker that can tell you, give you the different options and tell you what the pros and cons are of each of the options, because that should be our job. We should be able to help you make that decision.
One last question. Does it help the folk who have gone through Chapter 7, will they be able to apply for SBA loans? And if there's any waiting period or any other restrictions?
Well, it's not an SBA thing. It's more of a lender thing. So some lenders are more conservative than other lenders or have a different lens on bankruptcies. Our bank wants to have it wrapped up into a nice bow. So we want to make sure that if there was a prior bankruptcy, there's a reason and there is a recovery for that. So we get that during the pandemic, during recessions, there were issues, right? May have caused some bankruptcies. We want to understand what caused you to file bankruptcy and how did you remedy that situation? Did you pay everyone back, or were there deficiencies? Were there charge-offs? Were there defaults? So I think every story is different, but if you can demonstrate that, there was a reason why there was a bankruptcy and you remedied it and came out of it and now you're doing well and here's why you want money, we've generally been able to get those deals done. But conversely, if there's a bankruptcy and there was defaults and no remedies and no restoration, then generally those don't get done.
Great. Thank you. That's very helpful. Great presentation. Thank you.
Thank you.
Well, I know the questions can keep coming and we're running short on time. I would be happy if you all, either those who were live with us with the presentation or those of you who are watching this on YouTube, if you'd like to submit any more questions to Pei-Jin, we can absolutely take a look at those and try and get those answers out to you. This is something that might sit in your mind for a little while and then you come up with another question. Hey, I wish I would have asked that. And we're always here. You can reach out to and link with Jeff and I on LinkedIn. We're both on LinkedIn. If you have any of those questions, we are very happy to consult with you, even if you're not in our footprint. That's our job, and we really enjoy what we do every day. And Jeff and I have worked on a number of projects together, and it's been really wonderful seeing different businesses get up and running and making people's lifelong dreams come true of owning business ownership, because it's a really wonderful thing. So let's put up a couple of polls. I think Danny was going to put up a couple of polls. That'll help us know if we covered the right topic. So if we do another presentation like this together, Jeff and I know, what you all are looking for. So, and if you think of another topic that you'd like Jeff and I to discuss, or just banking in general, we are always happy at Old National to put together something like this, whether it be, personal finances, commercial finances, whatever's on your mind.